Most people think that to build a business, you need to use your own money. But what if you could access tens of thousands of dollars in funding without touching your personal credit or savings? That is exactly what business credit can do for you. It is one of the most powerful tools available to entrepreneurs, yet very few people even know it exists, let alone how to build it. If you are trying to grow your business, scale operations, invest in inventory, or even start fresh, business credit gives you financial leverage. And here is the best part, you do not need to be a large company to build it. You can start from scratch right now. In this video, we are going to walk through exactly how to build business credit the right way, step by step. Number 1. Set up your business the right way from day one. You cannot build business credit unless you have a real business structure. That means registering your company as a legal entity. Start with forming an LLC, S Corp, or C Corp. A sole proprietorship will not cut it because it is tied directly to your personal credit. Once your business is registered, you need a Federal Employer Identification Number (SIN) from the IRS. Think of it like a social security number for your business. It is free and takes just minutes to apply online. Next, you need a business address, a business phone number, a professional email, and a business bank account. These steps may seem small, but they matter. Lenders, credit bureaus, and banks look for legitimacy. If your business still uses a Gmail address and your personal checking account, you are signaling that you are not ready for funding. Take this seriously. The foundation is everything. Number 2. Get your business listed and registered with credit bureaus. Most entrepreneurs never think about this step, but it is critical. Your business needs to exist in the eyes of credit reporting agencies before it can build a score. In the business world, there are 3 major credit bureaus you need to be on the radar of: Dun Bradstreet, Experian Business, and Equifax Business. Start with Dun Bradstreet. You need to apply for a DUS number. It is free and acts as your business credit profile ID. Many vendors and lenders report payment history to D&B, and without a DUS number, your business credit may never even be recorded. Next, check that your company is listed with Experian and Equifax Business. If not, you can submit your business information to get on their radar. This step is often skipped, but without it, your future payments may not build any credit at all. Number 3. Start building trade lines with net 30 vendors. Here is where the actual credit building begins. Trade lines are credit accounts with vendors and suppliers that report your payment history to business credit bureaus. A common and simple way to start is through net 30 accounts. These are agreements where a vendor gives you 30 days to pay for goods or services after receiving them on credit. There are several beginner-friendly vendors that offer net 30 terms without requiring existing business credit. Companies like Oline, Granger, Queel, and Summa Office Supplies are popular starting points. Order small items, pens, shipping boxes, office supplies, and pay the invoice on time. Do this with 3 to 5 vendors that report to bureaus, and you will begin establishing your payment history. This is the business equivalent of getting your first secured credit card. Do not skip it. It proves your business can handle responsibility. Number 4. Always pay early. Not just on time in personal credit, paying on time is good enough. In business credit, paying early is what sets you apart. Dun Bradstreet uses something called the PIDEX score to rate your business credit. It goes from 0 to 100. To get the best score, 80 or above, you need to pay your vendors before the due date, not just on time. Early payment shows strong cash flow and responsibility. This one habit alone can make the difference between getting approved for a $5,000 credit line or a $50,000 one. Business lenders are conservative. They do not like risk. If you pay early consistently, they will open the door to more favorable terms, higher limits, and even unsecured lines of credit. Want to prove you are serious? Beat the deadline every time. Number 5. Apply for a business credit card that reports to bureaus. Once your trade lines are established and reporting, you are ready to level up. The next step is applying for a business credit card in your company name. Look for one that reports to business credit bureaus, not just personal ones. Some banks only report to personal credit, which defeats the purpose. Cards like the Capital One Spark, Chase Inc. Business, and Divvy are known to report to business bureaus. Use them strategically. Do not max them out. Keep utilization under 30%, pay early if you can, and build a pattern of responsible credit behavior. This card helps you build a credit mix, extend your payment history, and eventually access larger limits. Now, here is something interesting. Many business cards do not show up on your personal credit report at all, unless you default. That means you can build credit without damaging your personal score. Number 6. Separate personal and business finances fully. One of the biggest mistakes new entrepreneurs make is blending their personal and business money. Not only is it confusing, but it destroys your credibility with lenders. Business credit is built on the idea that your company is a separate entity. If you constantly use your personal debit card for business expenses or mix accounts, it looks like you are not ready for capital. Have a separate business checking account. Use your business credit card only for business expenses. Track all spending. When you apply for funding, lenders will look at your business's financial records, not your personal ones. Keep them clean, clear, and separated. This step is non-negotiable if you want to scale. Think of it like this. If your business cannot run without your personal wallet, it is not a business. It is a hobby. Number 7. Monitor your business credit regularly. Just like with personal credit, what gets monitored improves. You need to actively track your business credit scores and reports. Why? Because errors can happen. Reports may be missing, payments might not get logged, and identity theft is real. Use services like Nav Credit Signals from Dun Bradstreet, or directly check your scores with Experian Business. These platforms show your current status, any recent activity, and what is helping or hurting your profile. Monitoring also helps you prepare for upcoming applications, so you can make improvements before applying. Number 8. Use your credit to grow. Not just borrow. Business credit is not about going into debt. It is about increasing your capacity. When used right, it allows you to take on bigger projects, fulfill larger orders, hire faster, invest sooner, and grow quicker, without draining your cash flow. That is the point. Use credit as a lever, not a crutch, but be disciplined. Just because your limit increases does not mean your spending should. Use credit with purpose, not pride. Business credit is not just about numbers. It is about trust. And trust comes from relationships. Do not wait until you need money to talk to a lender. Start early. Open accounts with banks that support small businesses. Talk to a business banker. Let them understand your goals, your operations, and your growth plan. Over time, this relationship can lead to faster approvals, better rates, and custom funding options. Lenders are far more likely to support businesses they recognize. You are not just a credit score. You are a client. Treat your bank like a partner, and they will treat you like one too. This is how big companies operate, and you can do it, even if you are just starting. So, here is the truth: building business credit from scratch is not hard. It just takes intention, structure, and a bit of patience. If you do the work now, you can build a business that funds itself, scales faster, and never relies on your personal savings again. If this helps you see the path more clearly, hit that like button, subscribe for more real-world strategies, and share this with someone else trying to grow a business. And now it is time to shift from money to something even more important. Go watch Why Time is More Valuable Than Money. Use it wisely, because money lost can be earned back. But time lost is gone forever. Let us help you use it wisely.